Welcome to Insights. I'm Eric. Thanks for joining us again on this weekend. We're going to talk about the grain market again. The grain market is showing complete resilience to the upside. It's not something that you should probably guess at too much here. We should be following the evolution of the trade and playing this one by the numbers, and we're going to talk about how that looks specifically in terms of the three time frames. This is going to be an open content review for discussion of the evolution of the trade. We're going to stop at energy, and then we're going to make it for subscribers only because of the development that's taking place here in the specifics. We need to go into deeper detail within that one, and that's going to require restricted content. So let's start this off by talking about the three markets across the time frame. The daily time frame is here, the weekly time frame and the monthly are across the board. They create a composite trend. The composite trend, if you're a subscriber, knows whether or not this is a market you want to chase, and everything, here's the composite time cycle, everything is bolded red. So it's clearly something that you don't want to be chasing these triple ups. These markets are screaming higher. They rarely get above 2. Is it a warning that we should be expecting a correction? Yes, to some degree. To answer that question specifically, we probably need to follow the daily time frame and the weekly time frame and judge the cycles there and see how far this could go and where does the reversals lie. If you study corn, you pull out here and you get into the corn, and I'm going to find this quickly here. I'm going to have to look this in detail. You're going to get something of this, and you're going to look at the three time frames. We're going to have to study the reversals in detail, but I'm going to leave that into the restricted content. I'm going to follow up where we were in the open content. I want everybody to go back, and I'm going to leave under the in the links underneath this video. I'm going to leave a link to where I talked about how far the price and time cycles could go on the daily side, and I did a study of comparison to silver, and I said, well, at that time we compared it to silver, and I said the bears would come in and say it's time for a sell-off, and I thought they could be wrong here because it's too early and the time cycle was too early. Well, that hasn't changed a lot. The price cycles have stretched a little bit more, but the price cycles have more flexibility and the time cycle has less flexibility. It's moving higher, but they're not to the level where it's reached an extreme zone where it can't get pushed any higher. Again, the link below will provide a further discussion of this, so there's no reason to hash that. I want you to watch that video if you haven't done so already. It's well worth the effort here. If you're trying to understand why corn continues to take out its short-term high, it has to do some with the explanation of here. It has to do with the explanations of the cycles on the weekly time frame. But everything is starting to get a little bit more extended. I'm going to quickly introduce here that the monthly price and time cycles are starting to change as well, especially on corn. We've reached 1.1 on the cycle. It's highlighted red now, which is a precursor warning that this thing's getting a little bit extended. I've seen these cycles in hot markets go to 2.5 standard deviation on the monthly cycle, but that's about it. There is not as much flexibility on the price cycle as there is in the weekly and daily time frames. So if this gets up to 2, you're going to start to take profits on the monthly time frame. This is really a solid indicator in terms, and it can't be fooled with. If this reaches 2, we are going to get a correction. Now, I'm not saying it's going to. We're just going to have to watch. That's something that you keep an eye on the matrix. The matrix is updated every day. People tend to focus on it from week to week, and that's fine too, but it is updated every day, and the primary trend cycles are updated daily as well, so keep an eye on them. The time frame in terms of here, this is the time cycles. Everything is still below 0, so the 7-month and 9-month up impulses are relatively early, and that's an important observation. We can confirm that over here into the primary trend quick hit box. The 7 and 9 months are where they're up, and it provides the returns that we've seen during those periods. These returns are going up quite sharply as the non-professional players monkey pile in, so to speak, into these trades. And that often happens in hot conditions. But we need to keep an eye on the daily time frame right here in terms of when this gets too extended. These numbers look pretty gaudy and pretty high and pretty extended, but I've seen this before. Again, the comparison, the other one, the video that's below in the links, if you watch it, talks about how these numbers were high at one point in silver as well. But silver didn't slow down until we reached 2-3 standard deviations, and I will talk about that when the time comes. That's when you really get one foot out the door, just walk away. This is not a walk away moment. The risks are rising. The composite trends are pretty high. These are the composite price and time cycles across the 3 time frames. These are not to be trifled with yet, but these can go higher. I've seen these above 2 standard deviations and really organized, focused rallies. And I think what we're seeing in the grains market is an organized and focused rallies. If we're going to go higher, you need to have time allows it, which is something that we say that the door is still open. But you also have to have energy, and that's right here. And now that's something that we're going to have to talk about in specific detail. I'm going to have to go to this tab here, and we're going to go through that and the reversals, and we're going to say, well, what could corn in particular, even though you can apply the analysis to all 3 markets, what can it do? So I'm going to stop here for the non-subscribers and thank everyone for watching the video. If this stuff really opens the door to possibilities on how you analyze these markets, whether you're a trader, investor, producer, or user of these commodities, I suggest subscribing to the Matrix to really learn the in-depth nature, the fractal nature of trends that are out there. Most of the analysis is just too simplistic, and if this stuff looks complicated, you will get it over time as you study it, but there's a bit of a learning curve, but there's a lot of complexity inside of markets that focus on things that are well and above beyond simple moving averages and TA and other tools that are often and commonly discussed. They don't do you much good. But I want to thank you for watching. If you have any questions, go back to the blog and contact me directly. Sign up for the Matrix, or you subscribe to the channel, the YouTube channel that's down there, or like this video. Those would all be great. But have yourself a good weekend and keep an eye on the grain markets.